I'm trying to turn $1,000 of Robinhood's money into $1,000 of my money. Let me quickly explain my small account margin strategy. I'm using Robinhood Gold to get a free $1,000 margin loan. I pay $50 a year for Gold membership, primarily for the 3% IRA match. One of the Gold perks is a free $1,000 margin loan, which is central to my plan. First, I purchased my foundation fund, PAAA. This is a stable fund with a yield better than what's typically available from high-yield savings accounts or Treasury bill ETFs. This stability is crucial because my small account is close to Robinhood's minimum of $2,000 for a margin loan. If my equity drops below $2,000, I'll be subject to a margin call. I made a few mistakes in my margin buffer early on and had to add some additional PAAA shares. Adding these shares increased my buffer and got me out of trouble. Check out my videos on margin jail for additional details. I used my $1,000 of interest-free margin to buy 4 ultra-high-yield ETFs for $250 each. These were MSTY, SNOY, COIW, and NVYY. Due to poor performance, I sold Misty and bought HOOW. I've since sold HOOW, SNOY, and COIW. I replaced SNOY with Chippy, CHPY, and combined the HOOW and COIW positions into one new ETF, BLOX, or blocks. I'm taking half of the dividends and reinvesting them back into the funds. I'm taking the other half of the dividends and buying my forever fund, SPY, until it reaches a balance of $1,000. Then I'll work to pay off the margin balance. My goal is to keep SPY forever. It's a NAV-stable ETF with solid yield and feels like something I can keep for decades. So that's my infinite dividend plan. If it works, I'll get $1,000 of SPY shares for free. The first 5 videos I published have lots more details. Remember, nothing I say here today is financial, investment, legal, tax, or any other kind of advice. I am not a financial professional. You need to do your own due diligence for your investments or consult a professional. Before I get to dividend updates, I want to give a shout out to PAAA for holding strong. Here's a 1-month chart with PAAA, a close competitor, JAAA, and FSCO. All 3 are closed-end funds, but PAAA and JAAA focus on higher quality investments than FSCO. And you can see the beating that FSCO has taken over the last month, down 18%, while PAAA here in orange has been pretty flat. JAAA had a little dip. If we scroll into the 5-day, you can see the JAAA dip a little better. PAAA has just been rock solid, while FSCO has been bouncing all over the place. I chose PAAA for this very reason. I wanted it to be steady, and it's lived up to my expectations. Now let's turn our focus to dividends. NVYY paid me $3.67, or about 31.5 cents per share, and has been a pretty steady dividend payer recently. This is around a 97% annualized yield. I split the dividend in half. $1.84 went into SPY, and I'm still holding the other half, $1.83, along with previous week's dividends. I'm exploring swapping NVYY out in an effort to gain some more NAV stability. Things have just been really busy, and I haven't had a chance to really dive into it yet. So I'm being cautious and not reinvesting those dividends at this point. Blocks paid me its 36% annualized yield at just shy of 10.5 cents per share for a total of 91 cents. I split the dividend in half and reinvested it. Now let's take a look at Chippy. It paid me $1.30, just shy of 47 cents per share, and that works out to about a 40% annualized return. I ran into some housekeeping issues with my Chippy dividend. I mentioned in a previous episode that DRIP was turned on and reinvested my last dividend, $1.45, automatically before I could stop it. I thought I had stopped it the week before, but apparently I was too late, and that $1.44 was also reinvested directly back into Chippy without being split in half. But the bookkeeping error that I found is that not realizing that the $1.44 from 3 weeks ago had automatically been reinvested, I went ahead and split that dividend in half and used the 58 cents that was left over from the week of February 6th and invested another $1.44 into Chippy. Although this isn't exactly what happened, you could basically say that I double invested the 2/12 dividend of $1.44. So this week's dividend of $1.30, I have not reinvested into Chippy nor have I split it in half. I'm still trying to figure out the best way to handle this record-keeping situation. It's only a little more than $1, but I'm trying to keep things clean. Compounding that record-keeping issue, I also have additional buying power from a refund for my gold membership. I mentioned in last week's episode that I finally got off the wait list and got my Robinhood Gold card. During the setup process, it transferred the $50 per year Robinhood Gold subscription from a debit to my brokerage to just putting it onto the Gold card. But by doing that, they refunded me a prorated amount for this year's subscription. So they put $17.26 back into my account, which reduced my margin alone and increased my buying power. So you can see here I have $30.71 in buying power. That includes a bunch of the NVYY half dividends that I haven't reinvested, the $17 and change from my Robinhood Gold prorated refund, as well as the issue with the Chippy dividends. I'd like to get that $17 refund off of the books here, but I'm not exactly sure how. I thought about using it to buy a little crypto and add to all the free crypto you see on the screen right now, but it won't allow me to buy crypto on margin. So if we go up and take a look at the individual account, that $2,048 is really about $17 overstated. I'm closer to $2,030. Taking a look at the account overall for the week, you can see it was choppy and ended up down about 0.5%, which isn't bad considering all the things that went on in the market this week. Crypto has been having lots of issues this week. But if we take a look at blocks over the week period, you can see it was actually up a little bit. So far, I've been happy with this investment. It's had a lot of headwinds with just crypto being down in general, but overall it seems to be holding relatively steady. Let's take a look at Chippy. Down 1% on the day, but for the week, down about 1.65%. So not terrible. And it doesn't move around a ton. It was a high of $61.79 and a low of about $59.12. And last but not least, we have NVYY for the week. This chart shows Monday through Friday only. And I wanted to compare it to NVIDIA, which has earnings release last week. NVIDIA beat estimates, but the market hammered it down. Interestingly, NVYY in orange was down about 6.64% compared to NVIDIA's minus 7.5% in price return. So that's certainly really interesting, as I would expect NVYY to underperform when NVIDIA goes down. So let's check out the total return. So NVYY increased its lead over NVIDIA during this time period, down only about 4.75%. You have to remember that NVYY is a leveraged ETF. The fund itself is not actually leveraged, but it's based on a 200% leveraged ETF tracking NVIDIA. So good for NVYY having a better week than the underlying. Things got a little worse for the portfolio this week. The 3 combined high-yield ETF positions are down about 52%. The SPY-I position is at about $185, and combined together, down about 33.5%. I hope you enjoyed today's video, and I'd really appreciate it if you would like and subscribe to get future updates. And remember, nothing here today is financial, investing, tax, or any other kind of advice. I'm just inviting you along my journey. And if you'd like to learn more about my small account margin strategy, check out the first 5 videos in the series. Good luck hunting those infinite dividends. Take care.